Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, March 21st, 5:21 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend since the O'Neill follow-through days back on November 1st and 2nd. You can see we're back to the coveted all clear 4 green arrows. As soon as I say all clear, you know that's probably a jinx, but we present what the market is actually doing, not what our opinion on the market is. And leaders regained and held, for the most part, nothing is ever 100%. Their leading role with yesterday's FOMC and today's follow-up. So the yellow sub arrow has been removed from market leadership, and on the short-term trend, multiple closes back above the 21-day moving average for small caps. So we remove the yellow sub arrow there, which means all 5 of the major indexes that we cover in these nightly videos are trending above their short-term 21-day, medium-term 50-day, and long-term 200-day moving average. So what happened today? A little bit of euphoria after the FOMC reaction yesterday, with bulls seemingly getting everything that they wanted from Jay Powell, and a very positive afternoon reaction and an overnight gap up of 0.55% on the S&P and 1.1% on the NASDAQ 100. Noting that this was the second day up after a breakout from the consolidation that we were in on the S&P. And it was actually the 4th positive day up. You always need to track where you are relative to where you have been to know where you could possibly end up going. So we had no plans on chasing anything after this gap up. We preferred to see how it played out. And it kind of went very tight sideways for about half of the day, then a little bit of a mild fade in the afternoon, mostly on bid caps and mostly from the index standpoint, because Apple was down 4.1% as the Department of Justice filed antitrust an antitrust lawsuit against them. But leaders fine, mid and small cap led. Here are the final numbers. Big 7 down 0.44% on average, as I said, due to Apple. The RG8 up 1.16%, good stuff there. S&P 500 faded in the afternoon, so from a 0.55 gap up open, gave up little less than half of that to close up 0.32%. Equal weight, good breadth, up double what the market cap weighted S&P did, and again, that's weighed down by Apple. NASDAQ 100, disappointing, from a 1.1% gap up to only close up less than 0.5%. Equal weight, better, up 0.73%. Again, that's positive because that indicates breadth doing better than the weakness in just the big cap that were weighing it down. In addition to Apple, we also saw Google down a little less than 1%, Tesla down 1.6%, Netflix down 0.8%. So it wasn't just Apple weighing down the big 7. Dow up 0.68%, nice performance there, and nice performance also from mid and small cap, which you don't hear much about on the headlines, but this is part of the under the hood investigation that we do every night. Both up approximately 1.1, a little better percent. In global diversified 60/40 stock and bond week, only up 0.14%. Broad stock not doing that much. In fact, international stocks just barely positive on the day, and bonds basically flat, traded in a tight range. So underperformance there. In-house GROTECTION up 0.27%, one new buy and an add to an existing position. We'll talk about that when we get to the charts. Speaking of which, let's get to the charts. Here's the S&P 500. You can see the inflection point with the Fed, the arrow that I have there, and the somewhat euphoric gap up. But note again, 4th day up, never chase after. We really don't like to chase even on a 3rd day up. But day 1, a bit of a disappointment as it was a gap and a fade. Undercut, day 2, good stuff. Undercut closed at the top of the range. That was the day before the Fed. breakout yesterday on the Fed above this. Here's a clean breakout above the top of this consolidation that we had been seeing, and then a gap up this morning sideways, and then a fade. Let's look at a 15-minute chart here. So you can see here was that first gap up I was talking about, but it faded. Here's the gap down with strength. Here's the Fed breakout. Here's the gap up this morning. Note the incredibly tight range, about 15 points, and then a little bit of a fade in the afternoon. As I said, Apple was distributed. So we do have an unfilled gap here into the highs of the Fed day that may fill and bounce. That's something that we're looking for. But as long as we hold this breakout and the first test of the 8-day moving average, we want to hold that as well. But in a couple days, the 21-day moving average, which is now above the 5,100 level, will come up near the top of this consolidation and provide additional support for any pullback that we should get. And at this point, then it's just a matter of monitoring strength for your watch list and looking for low risk entry points. Here's the NASDAQ 100, as I said, a bit more disappointing with the 1.1% gap up, fading into 0.7%. Let's look at a 5-minute here. You can see pretty much selling right away, an attempt at a new high. And then the sell-off late morning, lunchtime, early afternoon, sideways into the close. Look for a possible gap fill there. There's not much of a gap, but it's there. And then same situation, the 8 will come up to meet price, and what will happen? Very clearly not a breakout yet. The breakout failed. We made new highs today on the NASDAQ 100. And then it failed, so it's not as clean a breakout as we're looking at for the S&P 500. It was the declining top trend line breakout, not a horizontal breakout. Dow Jones Industrial Average, higher high breakout yesterday. Unfilled gap also approaching that 40,000 level, came within 100 points of it overnight. Mid caps, good performance today, new highs. Small cap, another good performance. Second close back above the 21 after that 4-day tight consolidation between the 21 and the 50. And that looks like a high close after this breakout back into the base. So definite good reaction from small caps, and we want to see that. The Powell's comments yesterday well received by small caps. Something a bit odd we'll get to in a second. First, let's do the VIX. That was down now with a 12 handle, although it did close at the top of the range. We note the break below this trend line, this rising trend line from higher lows being made on the VIX. We did close near the top of the range. That corresponds to the mild sell-off in the afternoon on big caps. But this is really what kind of surprised me today, and it was a headwind for stocks as well. The dollar, look at the weakness on the dollar yesterday after Powell. Selling off and then weakness into the close, but a gap up. And then a break of the pivot, the FOMC pivot of 103.90 on the dollar. It surprised me, no question. And it's not a benefit to stocks in any way, shape, or form. You don't want to see an overly strong dollar. It's a headwind for stocks. But we did break above the pivot on the dollar there, and that is a negative, and it is something that we're keeping an eye on. And it also translated over into headwinds for certainly for silver. That was the weakest on the day, down 2.75%. Gold, not bad, closed mid-range after a gap up, down 0.1%. Gold stock gapped up and faded down 1% on the day. Bitcoin it ran into the declining 8-day moving average and actually down small for the day after another gap up there also. All right, on to bonds. Not a lot of movement in bonds today, but different action from the long end of the curve versus the rest of the curve. Net, the broad bond index up just slightly, 0.08%, which means on the whole yields were lower. The TLT up 0.22%. So down a bit, down 0.29% on the 30-year, so a little bit of a pullback in the yield there. TNX just barely negative. So we do have the top of the range here on interest rates that we're pulling back from. We don't want to see a breakout above the top of this range. That also will be a negative for stock. All right, that's our interasset correlation. Here's the tail of the tape. You can pause this. I'll hit the highlights. I'm saying day count up 2, really up 4 if you include the 2 before the breakout, but I'm really counting the breakout as the up 2. Some notes and news. Post FOMC rate cut probabilities: 10% of a rate cut in May, 72% of a rate cut in June. So we'll keep an eye on this as things play out, what the expectations for the Fed are from the Fed funds futures. Here's the action: 4.5 hours tight, mild PM weakness, so closed near the lows of the day, but that didn't necessarily apply to the small caps as they put in decent gains. But on the day, banks, home builders, industrials, and semiconductors to the downside, the 30-year yield mildly, gold, and silver stocks, and utilities. So I mentioned in last night's video, we'll be looking for possibly something new or adds to our existing positions. Micron had an excellent earnings report. We bought that gap up. It faded mildly into the close. Didn't trade with a lot of volatility, which is good, but we'll be looking for buyers to support the bottom of this range. We'll take a look at that chart in a minute. And we did add back to NVIDIA. So our adjusted beta up from 1.20 to 1.35. Bottom line for the day: post FOMC gap up saw the large cap fade mildly in the afternoon, in good part due to Apple being down 4.1%, but small and mid caps up on the day and leaders acting fine. All right, let's take a look at a couple of charts, and we'll start. Let's start with Apple. You can see we talked in our calls yesterday afternoon about that Apple being above the 21-day moving average. That was the first time in multiple weeks that we saw that, but that was undone today with the heavy volume sell-off. And these volume patterns are really not good in any way, shape, or form on Apple. Since it broke this 180 level, then that 180 level, we approached it within a couple points of it yesterday, and now we're closer down to 170. We certainly want to watch this 168.49 level. A break below there wouldn't be beneficial, very clearly. SMCI, with its typical volatility today, closed right on the 21-day moving average. The ADMA and the 1,000 level providing resistance. Support should be the low of yesterday. So decent low risk entry point if you want to play it against there, which we're considering. Dell, follow-up strength today with the gap up and holding it. AMD, on the other hand, ran into the declining 21-day moving average and faded and closed near the lows of the day. So not a good performance there. And relative strength has been terrible. This is on our avoid list for now. After hours today, Lululemon, weak guidance. So this right side of this base and break above yesterday's levels will be completely undone as it's down around 426 after hours. On the plus side, FedEx up almost 13% after hours today, and that's going to take it above the top of this base as they raised guidance. Now on Micron, heavy volume, 450% above average, did close near the lows of the range on the day, but up 14% on the day. Our stop will be to give it a little bit of room below the low of today's low, and we added to NVIDIA. You can see here made a higher high today and closed a little in the bottom third of the range, but really not a big deal. Volume has been light the last couple of days on it. Other action in the portfolio. Let's see, we've got Uber was really the standout for the most part today with the gap up, holding it back above the 80 level, slightly below average volume. However, NRGU, this is a broad energy big oil ETF, continues to trudge higher, up 1.5%. FCX continues with a high close since its breakout above this base. Other standouts, VRT. This is since its shakeout on earnings, just continues to act extremely well. We showed Dell. Coherent, another AI data center name with a gap up today. breaking this declining tops trend line. And ANET, ANET, nice breakout above this only 14% deep flat base. Would like to see more volume, but relative strength confirming it. That's it. Let's talk a little bit about what we do just very quickly. Revere, unlike any traditional advisor that you have, direct access to me and the team, active risk management. This includes being adaptable to what's actually going on in the market. We use technical analysis and multiple time frames to follow the trend. Focus on leading stocks. Don't invest in lagging sectors just because of diversification. That's what we call diversification. Of course, these nightly insight videos explaining our thoughts on the market and the portfolio changes, and we can quantify our downside risk. It's about 4.6% right now. That means if all of our stops were taken out in one day, that would be the downside. Traditional advisors, you get a pie chart, maybe a nice desk calendar at Christmas, and none of the other things that we consider to be critical to portfolio management and downside protection. And if you're interested in this approach, we'd love to hear from you. My email is don@revereasset.com. My partner, Dan Stewart, he's Dan at revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. GROTECTION, our flagship portfolio, has a dual mandate: grow assets in uptrends and protect them during downtrends. That means get the heck out of the way, especially if you break this nasty black line. That's the 200-day moving average, and all bear markets, every single one, are below the 200-day moving average. You're never in serious trouble in the market until you break that level. And with that, I'll wrap up the video for Thursday, March 21st. This is Don Vandenbord with Revere Asset Management, just telling it like it is. Thanks for listening and have a great day.